Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, and good evening, wherever you are in your corner of the world. French central bank chief eyes public-private partnership for possible digital euro. And as digital asset investors, we love hearing public-private partnerships. The head of France's central bank has spoken for the potential benefits of private sector involvement in the development and issuance of a future European digital currency. Francois Villeroy de Galhau, the governor of the Banque de France, said in a speech Friday for a public-private partnership, it would be the best way to issue a CBDC to retail users. His comments were made at a conference hosted by the German Central Bank, the same event where the head of the European Central Bank, the ECB, Christine Lagarde, said Thursday that the European Union had fallen behind on CBDC development globally. Both France and Germany have been vociferous opponents to overseas companies like Facebook launching its digital currencies that compete with fiat money. France's finance minister, Bruno Le Maire, said last September his government would push to have Libra banned from European soil. While Villeroy de Galhau didn't mention Facebook by name, he said the EU was already critically dependent on big tech firms for payments. Left unchallenged, he said they could shut out governments and central banks from having any monetary role in their own countries. Rather than compete with private companies, Villeroy de Galhau said that appropriate synergies between them and the public sector could lead to a better designed CBDC being put into circulation one day. This mirrors comments from the Bank of England earlier this year, which said private companies could resolve any shortcomings in the existing payment system with commercial solutions. The Banque de France is currently working with 8 companies, including Accenture and HSBC, to explore the regulatory and financial ramifications of launching a CBDC. And I want to thank ECK for sending that article. Another thing that I think is amazing that I would like to share, we've shared on Twitter U.S. Rep. Darren Soto, directly from his Twitter page, My Bills, the Digital Taxonomy Act, and the Blockchain Innovation Act just passed out of @Energy Commerce as amendments included in the Consumer Safety Technology Act. From the issue at hand to protecting consumer privacy, blockchain technology is transformational. The link will be included, as with every video we do, in the description below, along with our affiliate links. So again, if you're interested in reading the full discussion, you can click on the link. It'll take you directly to US Rep. Darren Soto's page, and you can find it as well on our Twitter page. The next article of discussion is Payments in a Digital World, which was a speech by Christine Lagarde, the president of the ECB at the Deutsche Bundesbank, the online conference on banking and payments in the digital world. Number 1 was the 2 trends in global payments, and then number 2 was the initiatives to strengthen European payments. Central banks can and should, within their mandates, be agents of change and fulfill their responsibilities toward citizens. In the discussion, the theory of central bank digital currencies, kind of in addition to the previous article, can be designed for wholesale or general purpose use. The digital wholesale money is not new, as banks have been able to access central bank money for decades, but new technology can be used to make settling financial transactions more efficient. It also opens the possibility of a retail CBDC, which would be very innovative in that it would be accessible to a wide audience. Introducing a digital euro for use in retail payments involves those 3 considerations. First was maintaining access to central bank money, and second is a consideration for introducing a digital euro, that it could create risk that need to be carefully assessed, and third is that the digital euro would need to be designed to meet the public's demand for digital payments without discouraging or crowding out private payment solutions. So there you have it. A lot of conversation again continues to keep moving forward with CBDCs, as we've discussed in previous video, that CBDCs and stablecoins are the future of finance. Another article I'd like to discuss: as XDC usage escalates, the ZenFin community decides to burn partial XDCE token supply. I'm going to enlarge this just a bit for your better viewing. So ZenFin, as discussed in the article, basically they're going to burn 5 billion of the XDCE tokens, bringing the total supply from 15 billion down to 10 billion tokens. And the community also plans to further reduce the supply of XDCE tokens again in the near future. So I think if you're holding XDCE, as we've seen with all of the other tokens, that the lower the supply, the higher the price and value of the asset. I'm going to play a quick video here: the clearinghouse risk reference rates and cryptocurrency, with former CFTC chair J. Christopher Giancarlo. So I'm going to play this video really quick, and then we'll have a discussion.
With respect to stablecoins in particular, you've spent a lot of your time now after the CFTC engaging and leading in this area as founder of the Digtal Dollar Foundation, which is, working to advocate for the exploration of the digital dollar. How did you get interested in stablecoins in particular? And actually, I should ask you if there's a difference between my use of stablecoins or digital dollars as well.
Sure. Okay, so the whole crypto dad thing was funny. I went to a Senate hearing in February of 2018, and I think, up to that point, I had a little over 1,000 followers on Twitter. I, to this day, still manage my own account. I don't use any outside services. And I walked out of that hearing and within 48 hours had 46,000 followers on Twitter. And it was something I never anticipated. I simply went to that hearing and put down my prepared remarks and looked the senators in the eye and said, look, there's something going on here in terms of the next generation's enthusiasm for cryptocurrency. And I think we owe it to them to treat it with respect and not disdain. And let's try to get this right and really be thoughtful about it. And the words I used may have been a little more artful than that, but it just exploded on Twitter. And I was awarded this name, Crypto Dad. And I realized that the Crypto Dad thing, while it's fun and it's good for a laugh, it also gives me a way to speak to these issues with some degree that people pay some degree of attention to. And so I think that's useful. And what are these issues? Well, and this isn't coming from me. This comes from Deputy Governor of the Bank of England, John Cunliffe, a very thoughtful person who I had the pleasure to get to know over the last few years. And he said to me, he says, Chris, it seems like once every few generations, once every century, people stop and say and ask the question, what is money? And he said, I think we're asking that question all over again. And I think he's really right. I think that the combination of the fact that tokenized money hasn't really been addressed in this country for over 100 years, we haven't done much with our currency, combined with the fact that we're going through a new wave of the internet. Some people call it the internet of value. When things of value, and that could be from soybeans to financial contracts, are going to be digitized, decentralized, and increasingly programmable. And that's what's going on right now. A generation or two below me, my kids' generation, are re-looking at money and experimenting with it. And this experimentation is going on. In history, sovereigns haven't always controlled money. Money is sometimes societal. Money is sometimes commercial. The notion that the central bank has a lock on all money creation is kind of a modern notion, and it's not really true. And we're seeing it again. We're seeing experimentation going on with money outside the official sector, and the official sector is coming to it now, and in some cases actually ramping up. But they're playing catch up, because this actually started 10 years ago with Bitcoin, and it accelerated with LibraCoin, and the proliferation of stablecoins is really moving very rapidly, and the official sector is in a game of catch-up to what's going on. Society's decided to relook at money in the light of new technologies. And in some cases, I think the official sector is going to be left behind. The genie is out of the bottle. I said in a tweet recently, the cat's out of the bag. And I really think that the official sector needs to wake up to what's happening. In the future, things of value are going to be digital and programmable. And people are going to look to program them into money directly. And if the money is not programmable, they will go to another instrument that is. And I think the Chinese have figured that out. And, the technological capability of money is historically been one of the reasons why people in commerce might choose one instrument over another. During the period of the European exploration of the eastern coast of North and South America, there were many currencies in use. There were Dutch guilders, there were French francs. The currency, though, that seemed to have an edge on the others was the dollar. But it wasn't the American dollar. It was the Spanish dollar. And the reason why it was the most preferable was because it had certain technological superiority to the others. For one, it was minted with New World silver, which was superior to Old World silver in that it needed less alloy, it was lighter, and it was more consistently pure. But the second element was that it was minted in such a way that it can be broken up into 8 equal pieces, known as pieces of 8. And that allowed it to be fractionalized, and therefore more use in smaller retail commerce. And those are two technical capabilities that drove that in the world back then, their preference to using that currency. Now let's fast forward today. As important as the dollar is, and it is without question now the world's premier reserve currency, and is likely to be so for a long time. And there's many pillars underpinning that. But at the same time, if you imagine a future where a currency other than the dollar is programmable, it is digitizable, it is tokenized, and the dollar remains an analog instrument, accounts-based primarily only for international transactions, is it not possible that the dollar could suffer in comparison? I believe it is. And therefore, I believe this is not a defensive strategy, it's an offensive strategy. We should do everything possible as Americans, especially as the official sector in the United States, to modernize the dollar, to stay ahead of the times, to prepare it for this new digital future. Do we really want to be the purveyors of an analog culture? If suddenly the world says that they need, I said of an analog culture, I meant an analog currency. If the world decides that they need a programmable currency to account for all the important things that today are accounted for in dollars. I was very proud to be the chairman of the CFTC, which oversees the markets, and I began the conversation with talking about markets where the world's things of value are priced, from soybeans to oil to foreign exchange and interest rates. Well, if all those things go to a digital programmable format, will they still want to account for them and price them in dollars if the dollar remains an analog instrument? Or will the world look for a digital instrument that they convert those digital units of value in the future into? And I think we need to take our eyes off just what's right in front of us on the highway and look at the horizon and see where things are going and think about how do we future-proof the dollar today for that digital tomorrow. And I think China's doing that. I know that the Bank of England is looking seriously at this. The Bank for International Settlements is. France is looking at this. A lot of the world has got big efforts going on looking at this. And we need to do that in the United States. And that's why we formed I formed this as a not-for-profit at the beginning of the year. I called it the Digital Dollar Foundation with contributions from my brother, who's a renowned Silicon Valley entrepreneur, and Daniel Gorfine, my former chief information officer at the CFTC, our former chief innovation officer. We formed the Digital Dollar Foundation, and then we teamed up with Accenture on a pro bono basis in the Digital Dollar Project. And our goal is really to advocate for the U.S. to move beyond a casual glance at this to a determined and thoughtful look at this, and doing that through a series of pilot programs. As the United States has always done big things, whether it be the space program and the internet, it's always been partnerships between the private sector and the public sector, and we're advocating for the same thing for the U.S. to look at a central bank digital currency that would be tokenized, distributed through the existing two-tiered banking system. So we're not looking for something that bypasses the banks, nor are we calling for retail Fed banking either. We're saying that a tokenized instrument can provide lots of means for financial inclusion to address issues of underbanked populations, but through existing infrastructure we have in place today. It would be minted a lot as cash is done today, that is produced either on behalf or directly by the Federal Reserve, distributed through the banking system in return for deposits, and then onward distributed into the broader economy. So that's what we're doing with this. It's a project that's near and dear to my heart. It's something I'm doing as what I believe is a public service, a way of giving back. I really believe that the U.S. can't shut its eyes to this. And whether one is inclined to do it as a defensive measure, or I think more importantly as an offensive measure, we have to ask ourselves, if everything is going to a digital format, why would we not do the same for our dollar? Why would we not modernize our dollar so it can continue to serve what I think has been a beneficial role for the most part since the end of the Second World War as the world's reserve currency? You know, the values that are built into the dollar, the values of a free enterprise, the values of rights of privacy properly balanced against the state's interest in law enforcement, the rights of freedom of expression, the rights of free market economics built into the dollar, I think have been a major reason why in the last 80 years we've seen a global economy emerge, a truly global economy, and with it, rising living standards for billions of people around the world have happened during the dollar's watch as the world's leading reserve currency. And I think that extending that into the future is in the interest of the United States, but also the rest of the world. And I think we do that by modernizing the dollar alongside the modernization of the modern economy.
And there you have it, directly from former CFTC chair J. Christopher Giancarlo. And that is pretty amazing, as we're going to use that to go into our final article of discussion. I want to thank XRP Commander at XRP Commander for sending that article to me. Now, here is where it gets very exciting and very interesting. I'm going to zoom in just a bit to make sure for those of you who are paying attention on your mobile. Do not look at your screen, please, if you're driving. And if you're working, don't get in trouble. Watch this again when you have time, as we tend to make this show where you can listen without viewing in your busy schedule of jogging, working out, driving back and forth to the office at work, or listening through Bluetooth in the office. So when you can view your screen, what we're showing now is a bill, and we'll begin on the January 1st of 2021. And let's get into what this is. The digital dollar, or the term digital dollar, means dollar balance consisting of digital ledger entries recorded as liabilities into the accounts of any Federal Reserve Bank. The digital dollar wallets, which will begin on the January 1st, 2021. The term digital dollar wallet means a digital wallet or account maintained by a Federal Reserve Bank on behalf of any person for the purpose of holding digital dollar balances. The term member bank means any national bank, state bank, or trust company which has become a member of the reserve banks created by the Federal Reserve Act, the 12 U.S.C. 221 ET-SEQ. And pass-through digital dollar wallets. The term pass-through digital dollar wallet means a digital wallet or account maintained by a member bank on behalf of any person, entitling that person to a pro rata share of a pooled reserve balance that the member bank maintains at any Federal Reserve Bank. So again, we have the discussion from Giancarlo on the digital dollar, his digital dollar foundation, and we're going now into the digital dollar wallets. I'm going to leave you with a final thought. Don't be afraid to fail. Be afraid not to try. And again, this is not financial advice. It is for entertainment purposes only. Much love to each and every one of you, and we will catch you in the next one.